Best Stockbrokers for Beginners by Wall Street Survivor.
What's up, guys? It's Levi from Wall Street Survivor, and welcome back to part 3 of our 10-part Survivor 101 series, where we teach you all the basics about investing in the stock market. Not to brag, but this video series is the simplest and most efficient way for you to learn how to invest in the stock market, especially as a beginner. If you haven't seen the last video about risk tolerance, make sure to check it out before you get too far into this video. Trust me, you don't want to make the big mistakes that most people do when they start out investing. So make sure you watch the previous 2 videos first, and look out for the next 7 videos coming soon. Today's topic is going to be something you've probably heard of, but maybe don't quite understand fully. Yep, that's right. Today we're talking stock brokerages. What are they? What makes them different? And most importantly, which one is best for you? To start, let's talk about exactly what stock brokerages do. A stock brokerage is a company that buys and sells stocks on behalf of investors, usually for a fee. So why can't you just go into a stock exchange and buy them for yourself? Well, it's extremely regulated, and a stockbroker has to have an official license through the U.S. Securities and Exchange Commission. So how do they make money? Well, you might have seen in movies like Wolf of Wall Street, stockbrokers at full-service brokerage firms have traditionally made their money on commission fees based on when you buy and trade stocks. However, with the age of technology, this is changing by the day. With people more and more moving over to online brokerages, nowadays there's no Leonardo DiCaprio on the other side of the phone trying to convince you to spend as much as possible so that he makes commission off of it. Because of this, now brokerages make their money in a variety of different ways. Sometimes they have a sign-up fee for when you create an account. Sometimes they make money on interest based on any of the uninvested cash that you have sitting in your brokerage account, and some have fees for specific trades that you want to make. So it's really important that you know what you're getting yourself into before you decide to start investing. So today we're going to break down some of the most popular brokerages so that you guys can know exactly what comes with each, the good, the bad, and the ugly. We'll talk about the benefits and downsides of each brokerage. Before we get into it, thank you guys so much again for watching. Please like the video and subscribe to the Wall Street Survivor channel for more videos like this coming soon. And comment down below if you have any questions or any feedback, as well as ideas for future videos. Okay, let's get into it. First up on our list of brokerages is TD Ameritrade. Now, TD Ameritrade might not be around for much longer. They're actually supposed to be getting acquired by Charles Schwab, but hopefully they'll retain many of their same strengths and work on some of their weaknesses. The great thing about TD Ameritrade is there's no account minimum and no commissions for trading. They have a ton of free in-depth research on their platform. That's pretty much what they're known for. They're really built out, and you can find a ton of stock analysis and stock research for any stock on the market. The Thinkorswim app for trading is super easy to use, and it explains things really well as having a really efficient and easy to use user interface. With TD Ameritrade, you can pretty much trade anything, whether that's stocks, bonds, mutual funds, ETFs, even foreign exchange trading. Plus, they have more advanced trading like options and margin. Sounds like utopia, right? Well, there are a few downsides with TD. If you're holding stocks for the short term and you're looking to invest more like on a day trade or swing trading type strategy, they do charge you for holding some stocks for less than 30 days. Mostly ETFs though. Their broker assisted trades can be costly, and when you're transferring your money in and out of the account, you can face some hefty fees. Overall, TD is a solid platform, and the Thinkorswim application is great for first-time investors, but be wary for some of the transfer fees and fees for ETFs that you hold for less than 30 days. Okay, next up we have ETrade. And if you haven't heard about ETrade, it's probably because their TV commercials stopped running in like 2011. Anyway, they also don't have any account minimums, which is great because that used to be a case across the board. They have multiple different types of platforms ranging from beginner all the way up to advanced. They really customize the user experience for whatever level you're at. And they just switched to $0 commission fees in October of 2019. They have a ton of educational material, and so they also are a great platform for research and stock analysis. However, their website does make some information that's important really hard to find. Some of the information or analysis that they have is behind a paywall, so you have to have a certain account minimum to access that level of analysis, and information about closing your account is really hard to find on their website. Just like TD, they also have large account transfer fees, so if you're moving money out of the account or even partially moving it out of the account, they're going to charge you for that. Overall, I really like that ETrade has separate platforms for beginning to advanced investors. That's a great move on their end to try to cast a wide net and help investors at all levels learn how to trade stocks. But let's dive into brokerage number 3. This one's a robo-advisor called Betterment. Now, if you don't know exactly what a robo-advisor is, I explained it a little bit in my last video, so please check that out. Basically, they use algorithms and artificial intelligence to determine an investor profile for you, and they actually end up investing your money on your behalf, not as a financial advisor in the traditional sense, but as a robot, basically. One of the most popular robo-advisors is called Betterment, and a lot of people rave about how easy it is to invest with them. With Betterment, you also don't have any account minimums, so you can invest with as much or as little money as you need to. There's also no account fees, which is great, and their smart investing platform allows for totally hands-free investing. You can trust that the money that you're putting into the account is being invested, and you really don't have to be active with it. Their research is really prevalent in their recommendations, but for investors, it's not necessarily accessible. They don't have much substantive educational material around their platform, so you'd have to go to another website to learn more about investing. They also use snail mail for account closings, which is not ideal at all, and there's a 0.25% account management fee, which really you can dodge with most other brokerages. So if you want to be completely hands-off and have a computer program managing your money, then Betterment is definitely your best option so far. But as far as educational material, learning how to invest, and the account management fee, it definitely comes at a cost and might not be the best for someone who's really looking to learn more about how to invest in the stock market. Number 4 on our list is interactive brokers. Now, we love interactive brokers for active traders who may be a little bit more advanced and kind of know what they're doing already with the basics of the stock market. Again, no account minimum, that's great. They have different levels of account tiers, like their light version and their pro version, so you can try the product without sacrificing anything. They don't have any fees on US stocks or ETFs, which is great. Their research offerings are extensive, and they have fractional shares. If you don't know what fractional shares are, this basically allows you to buy a piece of a share. Some companies have super high share prices, like Amazon at almost $3,000 a share right now, and that makes it really hard for beginning investors who might not have a lot of money to invest in certain companies. So with fractional shares, you can buy just a piece of a share specified at a dollar amount, and that makes it a lot more accessible, especially to beginning investors. Interactive Brokers does have a mobile app, but it's not the easiest to use if I'm being honest. A couple other downsides: their pro account gets charged an inactivity fee. So if you're not an active trader, it may not be the best platform for you. Their website has a ton of information on it, but it's not super easy to interpret. So hopefully that gives you guys a good picture of interactive brokers. Would definitely recommend interactive brokers for active traders, but if you're not as active or not as interested, you don't want to get hit with those inactivity fees, and you might not want to spend the time sifting through their website just to try to figure out exactly what they're saying in their educational material. And our last brokerage to round out our top 5 best brokerages is Robinhood. If you guys have seen my videos before, you know I'm a huge Robinhood fan. I think it's by far the best brokerage for beginning investors. Their app is super simple and easy to use. They don't charge you any account minimums and no commissions on your trades. You can trade stocks, options, ETFs, and even cryptocurrency, and their app makes it super easy to navigate because of their best-in-class user interface. They also offer fractional shares just like interactive brokers, so it's great for investors who don't have a ton of money to put into expensive share prices, and they have really easy, bite-sized research and educational material that balances being easy to digest and is also super informative. Now, Robinhood isn't without its downsides, and of course, there's things they can improve upon. Right now, they don't have any retirement accounts, and although they plan on offering IRAs and Roth IRAs in the future, at the moment, they don't have any options to help you save for retirement. They also don't support trading mutual funds or bonds, so if you're interested in those type of asset classes, Robinhood probably isn't the place for you. For more advanced traders who are really into data, financial research, and really want to dig through the nitty-gritty, Robinhood doesn't necessarily go as in-depth as some other platforms, so you might want to look elsewhere. Okay, so that wraps up our list of the 5 best stock brokerages out there at the moment. As you can tell, there is no one-size-fits-all brokerage, and it really is about picking the best one for you. They all have their own little features that set them apart and make them unique, and it's important to note that different brokerages are targeted at different types of investors, and the target market varies tremendously among them. For instance, interactive brokers might cater toward a more active, advanced trader, while Robinhood is unique for its level of access to stock market beginners. This definitely doesn't make one stock brokerage better than another, but it does mean there probably is one that's the best fit for you. Think about how often you plan on trading, what types of investments you want to make, and features you want to have when you're trading, and how much you actually want to learn about what you're investing in. As for us at Wall Street Survivor, again, we think Robinhood is the best stock brokerage for beginners, but please comment down below and let us know what your favorite stock brokerage is, where you've had success, and why you like it. Thanks again for all the support on this series. We're super excited to be bringing you these videos, with more coming in the next few weeks. Make sure to like, subscribe, and hit that notifications bell so you don't miss the next video in our Survivor 101 series. Thank you guys so much again for watching, and I'll see you guys next time.